Okay, this is the very first video on technical analysis. So in this video, we will discuss, what technical analysis is and what are the different types of charts involved in technical analysis. So let's start first with understanding technical analysis. See, technical analysis, if I talk, in simple words, it basically means analyzing historical prices. Let's say you have a price graph in front of you. Okay. Now, a price graph will tell you how price has behaved in past trading session. As you can see, initially price went down. Now the price is going up. So the job of technical analyst is to study this price behavior and form a conclusion. How price is going to perform in coming trading session. So in simple words, this is the meaning of technical analysis. Now in technical analysis, we have three different types of such graph. Okay, so number one is line graph. Number two is bar graph, and number three is candle graph. Now, line and bar graph has very limited usage in technical analysis. I will share the reason with you. And the most important one for us will be candle graph. Candles will give you the signal whether you should, go long on the stock or whether you should go short on the stock. Now, the one of the very important reason, why uh, technical analysts use candles in their technical study, because candlestick help us, improving our entry timing. Now, one of the reason why retailers or traders get into losses when they start trading, because they do not enter at the right time. So entering at the right time is very necessary in order to have a profitable trade with you. So candles will help us locating the right entry time, and these candles are divided into three categories: 1 day candle pattern, 2 day candle pattern, and 3 days candle pattern. So we will study one by one such patterns, maybe 15 to 16 patterns we are going to study. So if we are studying 16 patterns, then 8 patterns will give you the buy signal and remaining 8 patterns will give you the sell signal. Now let's first start with line graph. Let's first see how line graph look like and how we can plot the line graph. Now before that, you need to understand the concept of OHLC. Now stock market timings, I hope you already know this. So the trading begin from 9:15 and it lasts till 3:30 p.m. So OHLC. O stands for opening price. So let's say in morning stock opened the day at 100 rupees, made a day low of let's say 97. So this L stands for day low, and made a day high of 108. So this H stands for day high, and finally closed at 105. So C stands for closing price. So OHLC, open high low close. Now in order to draw a line chart, we need only closing price. So there is no requirement of opening high and low. Let's see how line chart can be plotted. Okay, so this is the graph. This will be termed as x-axis. Now x-axis will give you information about time period. So if I'm taking daily time frame, then it will be from Monday till Friday. And if I'm and y-axis will give us information about prices. So let's say 5 rupees, 10 rupees, 15 rupees, 20 rupees, and 25 rupees. So let's say on Monday, stock closed the day at 5 rupees, Tuesday closed the day at 10, Wednesday closing price was 15, Thursday's closing price was 10, and again Friday's closing price was 15. Now if you plot or if you connect these closing prices, you will get a line, and this is termed as a line chart. How we have drawn this line chart? By connecting each and every session's closing prices. Now the reason why line chart has very limited usage in technical analysis, because it gives me information about past trading session. The job of technical analyst is to predict future. So hence there is a limited usage of line graph. Now let's move to bar graph. So there are two kinds of bar you will get in technical analysis. Number one will be termed as bullish bar. Okay, so bullish bar, and number two is bearish bar. So there are two kinds of bar: bullish bar, bearish bar. Let's first understand bullish bar. So here is the one vertical line for you. Bar on left side, bar on right side. Now you need to remember that left represent opening price and right represent closing price. And these two extreme points, that is bottom and this top, it will give you information about day high, day low. Now, as you can see in this bar, opening is less than closing. Let's understand in better way. Let's put some numbers over here randomly. Let's say stock opened the day at rupees 100. Now after opening at rupees 100, it went down till, let's say, 97. Okay, made a high of 108 and finally closed the session at 105. So as you can see, opening price, which is 100, is less than closing price, which is 105. That's why this bar will be termed as a bullish bar. Opposite of this will be bearish bar. So opened at higher level and closed at lower level. So this is opening price, this is closing price. So in this case, opening price will be greater than closing price. So opposite situation, let's say now opening is 105, made a high of 108, made a low of 97, and finally closed the day at 100. So in this case, 105, which is opening price, is greater than 100, which is closing price. So that's why this bar will be termed as bearish bar. Now if you compare, bar graph and line graph, then obviously bar graph is giving you the more information, because here all four prices are involved: open, high, low, close. Whereas line graph will tell you or will give you information only about closing prices. So out of line and bar, I will say bar is much better. But again, it has a limited usage for the same reason, because it does not give me information about future. It only gives me information what happened in past. Now let's move on to candle. Now candle will give you the information what is going to happen in future. Now this candle concept has been invented by Japanese, so that's why this candle concept is also known as Japanese candlestick graph. So first we will focus on formation of candle. Let's first understand the basics, how candle is formed. So let's revisit the bullish bar first. Opening and right represent closing. Now if you connect this opening bar and closing bar, and you will get the candle. So this is how candle looks like. So if I erase, this line which is coming in middle, so candle will look like this. Now there are three properties of candle which you need to understand. Now this candle, first of all, this candle will be referred as a bullish candle. Okay, so we will term this candle as bullish candle. Why bullish candle? Because it is white empty candle. So this color, white color represent bullish candle. So opened at lower level and closed at higher level. So let's say opening was 100, closed at 105. So now the difference between opening price and closing price, okay, this difference between opening price and closing price is known as real body of candle. So this is the property number one you need to remember. Real body of candle. Now in this case, the difference between opening price and closing price is of rupees 5. So we can say we have a real body of rupees 5. Bigger the difference, bigger will be the real body. Smaller the difference between opening price and closing price, smaller will be the candle size. And this bottom line is giving me the information about day low. So let's say stock made a day low of 97. So this will be termed as lower shadow of candle. This is property number 2. And this upper line is giving me the information about day high price. So this will be termed as upper shadow of candle. This is the property number 3. Okay. So you need to remember real body, lower shadow and upper shadow. Real body will tell you difference between opening price and closing price. Lower shadow will give you information about day low, and upper shadow will give you information about day high. Now these shadows are also termed as wicks of candle or tails of candle. So lower shadow or lower wick or lower tail, upper shadow, upper wick or upper tail. Now let's understand bearish candle formation. Okay, how bearish candle is formed. So again, let's revisit bearish bar. Opened at higher level, closed at lower level. Now again, if you connect these prices, again you will get a candle, but this time you will get a filled candle. Earlier we got white empty candle, so we termed that candle as a bullish candle. Now we got a filled candle, so we will term this candle as a bearish candle. Rest everything is same. Only the difference is opened at higher level and closed at lower level. So this portion is real body. Okay, this line is giving you the information about day low. So this is the lower shadow of a candle. Okay, and this is the upper shadow of the candle. So this was the formation of candle. Now let's look one by one. You know how line, bar, and candle graph looks like. Give me a moment. So this is the Chart Nexus software in front of you. You can download this software from chartnexus.com website. You can visit www.chartnexus.com. Okay, first let's understand. First let's look at the line graph. How line graph looks like. So this is the graph of LIC Housing Finance Limited. So this is how line graphs look like. How it is plotted? It is plotted by connecting closing price of each and every trading session. Now let's move on to bar graph. Okay, so this is the bar graph looks like. Let me zoom it for you. So as you can see, there are two kinds of bar. One bar is in green color and other bar is in red color. For example, let's look at this bar. Let's study first this bar. This is the green bar. Now green bar is nothing but bullish bar. As you can see, opening is at lower level and closing is at higher level. So here is the date in front of you. So this bar is of 21st January, open 462, closing 478. Open is less than 47, closing. That's why we have a bullish bar. And bar before this bullish bar, this is red bar, this is bearish bar. As in this case, open is greater than closing. Open was 467 and close was 463. Now, if you convert this bar graph into candle graph, here you will get white empty candle, and at this bar you will get filled candle. So let's convert this into candle. Okay, this is how candle graph look like. Okay, so this is white empty candle, bullish candle, and this is filled candle, that is bearish candle. That's it in this video. In next video we will start with candle patterns. As I mentioned, candle patterns are divided into three categories: 1-day candle pattern, 2-day candle pattern, and 3-day candle pattern. So in next video I will start with 1-day candle pattern.